Good morning. It's Friday, the 22nd of November, and this is Govindraj Ethiraj, usually headquartered in broadcasting as well as streaming from Mumbai, India's financial capital, but in transit right now. The take: the Adani Group can't outrun its shadow. The responses to bribery allegations against the Adani Group that exploded across newswires early Thursday morning came from several mostly predictable quarters, but this one took what I would think the proverbial cake. The India research head of investment and wealth manager Sanford Bernstein said the market reaction, which is the fall in Adani stocks by about 20%, was short-term. These incidents, he said, were not specific to India, and such incidents tend to be short-term in nature given the nature of the infrastructure business, he told CNBC TV18. He dug in further, saying that they were not reading too much into the Adani Group's news and the news was unlikely to have lasting consequences for the broader market. Instead, he said they were focused on the broader solar sector and that solar energy was a domestic and export opportunity. If I were to decode what he said, it would go as follows. First, the allegations of corruption should be treated as routine because that's the nature of the infrastructure business in India. In fact, brokerages like his were building corruption into their sector analysis and modeling. Now, those are my words, not his. Second, because such allegations or brouhahas are routine, it would be back to business as normal in a few days or so. The frightening part is that he may be right. Everyone assumes that large contracts are not landed without some form of give and take, and specifically, no one really thinks that you're corrupt just because you got a big power distribution contract at a price that the electricity distribution company, including the one in question, may not otherwise have bought. Now, all this is priced into the stock price eventually. Now, since this is a discussion on business and market price and not morals, let's focus on the former, which is that Adani Group stock prices tanked more than 20%. No mean feat, even in a generally weak and sliding market. But before we go deeper into that, let's pause to take stock of the allegations. US prosecutors have charged Gautam Adani with helping drive a $250 million bribery scheme to Indian government officials to win solar energy contracts and concealed the plan as they sought to raise money from US investors, according to Bloomberg. And that's where the US SEC comes in. And more specifically, the SEC, or the Securities and Exchange Commission, which controls securities markets in the US, has said that during Adani Green's September 2021 note offering, which raised about $750 million, the offering materials misrepresented the company's anti-corruption efforts despite ongoing bribery activities. The 5-count indictment also accuses Gautam's nephew, Sagar A.R. Adani, Vineet S. Jain, both executives at an Indian renewable energy company, of breaking federal laws. The Adani Group has denied the US allegations and said that it would seek legal recourse even as it scrapped a $600 million bond sale. Now, there have been other collateral damages, including to the holdings of several mutual funds, which took what seemed like contrarian bets on the Adani Group. There are only a couple that we know of. Now, which brings us to the price. While the debates are still shrill, with considerable political grandstanding, the fact remains is that the markets, where the ultimate power lies in many ways, have voted down the Adani stock prices again. Now, this is perhaps the third major shock to the company's reputation and its stock prices, starting in January 2023, when New York-based short seller Hindenburg Research claimed in a report that Adani was involved in stock manipulation, accounting fraud, and money laundering. The report also alleged that the Adani Group was using offshore shell companies to inflate its stock prices and hide its true ownership structure. A long investigation by the Securities and Exchange Board of India here has pretty much gone nowhere, and allegations that the SEBI chairperson Madhavi Puri Buch had prior links to the Adani Group and may have influenced SEBI's investigation have also not really touched anyone. Now, it is a fact, and it's highly unlikely that any other company or business group in this country could have survived such scrutiny. But the markets don't care. In each instance, Adani Group stock prices have been hammered to the floor. Elsewhere, Kotak alternate asset managers have said, as an example of how institutional investors are reacting, that they've advised exercising caution with Adani Group stocks following the recent correction. Serious bribery allegations have been leveled by the US prosecutors directly against the chairman and his nephew. Also, this development raises valuation concerns, particularly for PSU banks that have extended credit to the group, Kotak alternate asset managers has said. So that was equity, and it's just not equity. Moody's Ratings has said that the indictment of the Adani Group's chairman and other senior officials on bribery charges is credit negative for the group's companies. Moody's Ratings said in a statement that our main focus when assessing the Adani Group is on the ability of the group's companies to access capital to meet their liquidity requirements and on its governance practices. Now, given Adani's past record of managing its problems within India, it will perhaps emerge unscathed from this round of battering too. But the markets clearly know something and neither forgive nor forget. And that is something that the Adani Group cannot easily negotiate or navigate its way out of that easily. And this is the third time unlucky for the group. And that brings us to the top stories and themes. The stock markets fall again, this time on Adani Blues. Goldman Sachs says India's markets are range-bound and will be so for some time. Will Indian markets take a credibility hit? And the fight over a 90-year-old British Airways route to India.
This is the Core Report with Govindraj Ethiraj.
The markets get the Adani Blues. Stocks were once again scraping the bottom as the main indices ended Thursday's trading session in negative territory. The BSE Sensex fell about 422 points after the usual gyrations to about 77,156. The NSE Nifty 50 dropped about 168 points to 23,349, also trading in a wide band. The Adani Group stocks took the maximum beating. A research analyst at SMC Global Securities told Reuters that investors don't like any lapse of corporate governance. Until there is clarity, they will shy away from the group. The news also triggered dollar bond prices for Adani Group companies to fall sharply in early Asia trade, and analysts are now watching banks closely as many of them have a significant exposure to the Adani Group. India's range-bound markets. The question uppermost on most people's minds till the Adani bombshell landed on Thursday was what was the general direction for Indian equities and markets at this point? Well, Goldman Sachs, the perennial bull, has an answer wherein it also expresses a more bearish opinion than what it had held a month ago. According to them, Indian equities are likely to remain range-bound over the next 3 months following their recent slide into correction territory after the worst earnings season in 4 years and nursing still high valuations, according to Reuters. Goldman analysts said in a note published on Tuesday that they expect the market to remain range-bound over the next 3 months and for a backloaded recovery as growth picks up. They expect the Nifty to hit 27,000 in 12 months, implying a roughly 16% gain from current levels and surpassing its record high of 26,277. Goldman remains tactically market weight on Indian equities. However, it expects the benchmark Nifty 50 to hit 24,000 in the next 3 months, implying a gain of a little under 3% from current levels. However, a reversal from last month when it predicted the Nifty would fall about 1% to about 24,500 in 3 months, Reuters has pointed out, adding that since that prediction, the Nifty and Sensex have slipped into the correction territory, having fallen more than 10% from their respective all-time highs on September 27th. Now, all of this we've been cataloging as happening because of record foreign outflows and slowing corporate earnings. Goldman also says that Indian equities run the risk of further derating as, despite the recent slide, valuations still remain above a fair value estimate of 21 times forward earnings. According to them, valuations have derated 8% after the recent pullback, but still trade at about 23 times forward PE for MSCI India, which is about 1.4 standard deviation above its 10-year mean. Not surprisingly, the MSCI index is also in correction mode or down more than 10% from its record high. Goldman says that Indian companies will post about 13 to 16% earnings growth over 2025, which is factored into their long-term Nifty target. By the way, for the July-September quarter, about half of the firms on the Nifty 50, that's 50 firms, and half of them have beaten analyst estimates, the lowest since 20% of companies topped estimates in the March 2020 quarter at the start of the COVID-19 pandemic, according to data compiled by LSEG and Reuters. The Adani impact on perception. Back to the Adani Group, what does the recent or the latest bribery allegations mean from a larger perception impact on the Indian markets and other stocks? And will this affect perception of Indian companies and their ability to raise finances or funds? I reached out to Shriram Subramanian, founder of InGovern, India's first proxy advisory firm based out of Bangalore. And I began by asking him how he was seeing the impact of the bribery allegations on the overall funding and stock market perception mood.
Yes, there is definitely a implication for the Adani Group itself. Its reputation has been time and again brought to question. It is by far the largest infrastructure company. So to that extent, they have their naysayers. They have a number of projects in the pipeline. So to that extent, they definitely will get affected. The project financing costs, the project borrowing costs will go up. Long only investors will shy away from equity investing in many of the Adani Group stocks. Definitely. But will it hinder their projects from a perspective of raising financing itself? Definitely no. There is always someone who is willing to give money for such marquee infrastructure projects in an emerging country and a large country like India.
So, I was seeing one of the brokerages said that, this is normal in any such infrastructure project. As in, he didn't exactly say what was normal, but he did say that these incidents are not specific to India and they tend to be short term in nature given the nature of the infrastructure business. So, my question really is that, therefore, because it's infrastructure, is it assumed in some ways that there will be, let's say, some cutting of corners in the way deals are structured or negotiated?
This is happening globally, right? I mean, even for that matter, even a country like the US, I would be very surprised if everything is kosher for large infrastructure projects. So, to that extent, globally, this is sort of a norm. It is priced into projects. Investors have accepted it. They go with it, they go with the flow. And at the end of the day, these are projects where large capital can also be deployed, and they are unique to the extent that infrastructure tends to have monopolistic characteristics, and pricing and everything, the returns are fairly stable also. So to that extent, investors like these type of projects, and they are, I think, okay with, they are very mature from a funding perspective.
And how do you see this affecting or playing out as far as the overall governance view on Indian companies is concerned, or Indian markets? Again, looking at it from outside.
So I don't think the implication on any one single group will have tarnished the entire Indian market. There are rotten apples. It's always a bell curve in any market for that matter. India also has its own bell curve. So there will be a run and a spectrum of companies which are, I would think, follow the best practices, even in the global best practice. You benchmark them to any global company, they would stand out. And at the other end of the spectrum, from corporate governance perspective, from these reputation perspective, etc., there will be companies which are down the line, so to say. Adani somewhere falls in between. Yes, there are a couple of Adani Group stocks are part of the indices. So to that extent, ETFs and all will have to benchmark or go with invest in the Adani Group stocks, and they have no other way out. But that's a norm.
Right. And if you look ahead, what would you say is, let's say, the path that companies who are in infrastructure, who want to be, let's say, actively fundraising and who want to be seen favorably by investors, are there some do's and don'ts? I know it sounds somewhat simplistic, but are there any do's and don'ts in this?
Govind, that's like a silver bullet in the first place. I think as long as we have a non-transparent political funding system, as far as we have a non-transparent, I think corruption is the norm, even in our daily lives, your lives and my life. I think we are a long way to go to answer your question.
Right. And you feel that coming back to Adani, this will even out or settle down once again, and then things will be back to normal or back to what it was earlier? So I'm also asking this question in the context of institutional investment.
Firstly, this is the first time that the Adani Group is facing bribery charges and corruption charges. Earlier charges related to securities law in India and minimum public shareholding. So this is the first time. So we should not conflate it with that issue which was there last year. And secondly, there is I would think, a well-oiled and well-processed of this even in the US. So it's not that US is finding such a company for the first time. US courts and US lawyers are well known, and there would be a well-oiled process out there. And I think there is a settlement mechanism out there. There's an appeal process out there. All these, obviously, Adanis will legally pursue it to its logical end. And the US, definitely the courts act swiftly. So to that extent, the resolution could be much faster than what it would have happened if were it Indian courts.
Right. Shriram, thank you so much for joining me.
Thank you.
Fresh lows for the rupee. The Indian rupee drifted to another all-time low on Thursday thanks to foreign outflows from local stocks and renewed strength in the dollar. The rupee declined to a low of 84 rupees 42 paise in early trading, eclipsing its previous all-time low of 84 rupees 42, but that's a higher version. It was quoted at about 84 rupees 41 paise as of 10:30 a.m. on Thursday, according to Reuters. A controversy around a 90-year-old flight. British Airways has dropped plans to axe its long-standing route to Bahrain amidst a public backlash, even as it scrambles to change its network to accommodate engine issues on its Boeing 787 Dreamliner aircraft, according to Bloomberg. Similar engine-linked issues, by the way, have likely caused some cutbacks in flights to India as well, according to some reports. But the other India angle is this. The first flights to Bahrain, all those decades ago, were actually en route to India. So coming back to British Airways, it's been forced to pare its network and schedule because of a shortage of spare parts for its Rolls-Royce Trent 1000 engines fitted on its Dreamliners. This month, the carrier said it would suspend long-haul flights to Kuwait, Bahrain, and Dallas and reduce frequencies to Miami next summer as it did not have sufficient aircraft to operate the flights. Coming back to Bahrain, it has now said that it will run flights between London Heathrow and Bahrain International Airport 3 times a week next summer and will increase to a daily service in winter next year. So this route has been operational for more than 90 years, and the decision to end service sparked a backlash from passengers as well as politicians in both countries. Interestingly, the first commercial flight of the now retired Concorde jet, according to Bloomberg, was from Heathrow to Bahrain in 1976, while the UK's Royal Navy also has a support facility there. So coming back to India, Imperial Airways, which was BA's predecessor, began services that stopped in Bahrain en route to India in 1932, at the time when the kingdom was a British protectorate. Bahrain later became an important stop on services to Hong Kong and Australia. And it's Friday, and it's time to bring in some of your wonderful feedback that is very important to us and useful as well in helping do our programming. So let me pick a few. Jay Acha says he liked the Mukesh Aghi discussion. Mukesh Aghi is the CEO of the US-India Strategic Partnership Forum. And this was a very interesting discussion even for me, because he brought in some very interesting points on why Donald Trump returned to power and how Donald Trump was quite likely to see through some of his promises, including imposing of tariffs on countries like India, which is something that we're all obviously waiting for with bated breath. TK Dhanesh says, could you please include crypto insights? Well, Dhanesh, I'd love to, but I must confess I do not understand crypto. And I also do not feel that it's sufficiently legal in India. It's actually technically not recognized by the Reserve Bank of India. And therefore, I'm a little unsure. And I would actually warn whoever listens to me to not deal in crypto unless you're very, very sure and you feel you understand it. And I guess also in a way that your assets and the taxes that you pay on it are protected. So it's something that you have to be very careful of after, of course, understanding it. At least at this point, I don't. But I will keep an eye on it because I know it is going quite crazy elsewhere in the world, or more particularly in the United States, where it's hitting record highs thanks to the industry's proximity to the incoming president, Donald Trump. Okay, K. Shriram requests an episode on the future of gold price. Yes, we've been talking about gold prices frequently, and we will come back to it next week for sure, because gold prices have fallen as the dollar has got stronger, and there is a lot of interest and curiosity on whether it'll resume its upward climb that it had earlier. On the other hand, prices are of course low at this point, and if you're buying gold in India, I think most people are saying that you should get back into it. Finally, Surya says that he's glad to see me back. He was a big fan of mine when I was working with CNBC TV 18. Yes, that was a while ago. And Surya thanks us for our new initiative. That's the course. So yes, Surya, thank you very much. I'm glad you remembered me. And I do hope to connect with you often on the core report. Thanks once again, and have a great weekend, everyone. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.